learn with joy.
Hi, hello champions. Good morning. Today in this video, I am going to discuss the concept called as the internal rate of return, which is very important concept. And before watching this internal rate of return, one small request is that please go through the NPV video. For your reference, I'm adding the link. I'm adding the link at the description below this video. Please go through the video NPV before starting with the IRR, because the example which I used in the NPV, using the same example, I am going to explain the concept called the internal rate of return. Okay, now internal rate of return in short, we'll be calling it as IRR. Generally at IRR, discounted cash inflow is equal to discounted cash outflow. Why? Let us understand that. Please understand. This point is very important. Here I stated that it is the discount rate which makes discounted cash inflow equal to discounted cash outflow. Let us understand this point. See what is happening. Let me go back to the NPV. Look at here. NPV, what we calculated. Okay. NPV, what we calculated is 34,846 rupees. I already told you, while calculating NPV, discount the cash flows using cost of capital. Clearly explain the logic why we need to discount using cost of capital while discussing the NPV. Please go through the video of NPV. Now listen to me. Here I am getting positive NPV 34,846 rupees when I am discounting using cost of capital. Now I am making positive NPV. What does it mean? I am making profit. Even after discounting at 16%, I am making profit. That means I am making the return from the project which is more than 16%. So here it will be, one thing is concluded, my IRR is greater than 16%. But how much is the IRR? We have to calculate using guess rate. We have to go by the guess rate. No other straightforward formula for the calculation of IRR. We have to go by the guess rate. As a guessing, I am taking 21%. As a guessing, I am taking 21%. Look at here. So here the task is what? We need to calculate return from the project. What is the returns? How much we invested? 2,40,000. Beyond 2,40,000. Beyond 2,40,000. My investment is 2,40,000. Beyond 2,40,000, whatever the money we are making, that is the returns making from the project. That money I want to convert into percentage. Look at here. Let me take an example. If you make a total of this, we'll get 4,32,000. Means the total returns. See, I'm not taking time value of money into consideration as of now. The total returns, what I'm making is 4,32,000 rupees from the project. By investing how much? 2,40,000. By investing 2,40,000. If you exclude that, 1,92,000 is the extra inflow. This 1,92,000 I want to know in terms of percentage. So that means what I am doing here, I am converting all my returns. Into percentage. That I am calling it as internal rate of return. If you convert all your returns into percentage, that means entire 1,92,000 if you convert into percentage and if you discount, then what is going to happen? The discounted cash inflow will be 2,40,000. Why? Because the extra returns, whatever we made, we convert into discount rate. And we are discounting the cash flows using such discount rate. If that be the case, what is going to happen? Your discounted cash inflow will be 2,40,000. Your discounted cash outflow is 2,40,000. Your NPV will be automatically 0. So that people used to say at IRR, DISC equal to DISCO and NPV will be 0. Why it is happening like that? Because entire extra cash flows or entire extra returns we are converting into discounting rate, which we are calling it as IRR. As I told you, NPV is 34,846 rupees. We are getting positive. That positive value we need to convert into percentage. If you convert that 34,846 into percentage, obviously DISC will be equal to DISCO. So as I told you, it will be greater than 16%. As a guessing, I am taking it as 21%. Using 21%, I am calculating the present value factors. How to do that? 1 divided by 1.21 is equal to is equal to is equal to. First year 1 time is equal to. Second year 2 times is equal to. Third year 3 times is equal to. If you do that, we'll get the present value factors. If you calculate the discounted cash flows, total comes to 2,43,426 minus disco. Still, I am getting positive NPV. Even after taking 21%, still I am getting positive NPV. What does it mean? I am making more than 21%. So I am taking 22%. I am calculating present value factors of 22%. I am taking the discounted cash flow 2,37,000. This is the disco. This is disky 2,37,808 minus disco 2,40,000. We'll be getting negative NPV. That means, listen to me carefully. See here. That means, here it is positive value. Here it is negative value. Positive, negative. Somewhere in between these two, NP will be 0. Somewhere in between these two, NP will be 0. That means one thing is concluded. My IRR between 21% and 22%. When I am taking 21%, it is positive. When I am taking 22%, it is negative. Somewhere in between these two, NP will be 0. Are you understanding how to do that? Number one, through interpolation. We are going to do through the interpolation. What is interpolation? Look at here. I am taking percentage. See here, percentage NPV. By increasing 1% from 21 to 22, by increasing 1%, my NPV decreased from 3,426 rupees, it decreased to negative 2,192. So what is the total decrease? Means 3,426 plus 2,192. Why plus? 3,426 becomes 0 and then 0 becomes negative 2,192. Total decrease is 3,426 plus 2,192. Total comes to 5,618. I am explaining this again. Understand. From 21%, if I increase to 22%, 1% increase. By increasing 1%, how much is the NPV decrease? Means positive 3,426 decrease to 2,192 negative. Now 3,426, first it becomes 0. Look at here. 3,426, first it becomes 0. Then 0 become negative value of 2,192. Then 0 become negative value of 2,192. Now total decreases 5,618. But to make NPV 0, how much should be decreased? Means 3,426 should become 0. So the decrease that we are expecting, to make NPV 0 is 3,426. Are you understanding? Now, so how much is that? Means do the cross multiplication. How to do that? 3,426 into 1 divided by 5,618. 3,426 into 1 divided by 5,618. You will get 0.61%. Here one more confusion. Sir, 3,426 into 1% divided by 5,618 means again you have to multiply with into 100 to convert into percentage. First, what you are doing? 3,426 into 1%. If you apply percent, the percentage converted into decimals. Divided by 5,618, you will get in decimals. To get in percentage, again you need to multiply with 100. So what my suggestion is that don't do that simple. 3,426 into 1. Don't take 1% into 1. Divided by 5,618. You will get 0.61 percentage. Are you understanding? All of you, simple. By increasing 1%, decreases 5,618. To make the decrease of 3,426, how much I need to increase? 0.61%. So our IRR is 21.61%. 21% plus 0.61% totally comes to 21.61%. The same concept they given in terms of formula. IRR equal to lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate into higher rate minus lower rate. In our example, lower rate is 21%, higher rate is 22%. So 21% plus NPV at lower rate 3,426, 3,426 minus 2,192 at higher rate, 22% negative, 22% NPV is negative. I am taking negative 2,192. Higher rate is 22%, lower rate is 21%. If you solve this, again you will get 21.61%. Either you can go by the formula approach or you can go by the interpolation. That's up to you. You will get the IRR of 21.61%. What does it mean? If you discount the intermediary cash flows using 21.61%, your NP will be zero. Maybe you'll get rounding up difference 5 rupees, 10 rupees extra. I mean negative or positive because of rounding up. 21.61 something. But we are taking round of 21.61%. All of you clear about this? IRR means simple internal rate of return or rate of return making by the company from the project invested. Profit making by the company in terms of percentage. At IRR, NP will be zero because DISCI will be equal to DISCO. Now, look at, listen. IRR is 21.61%. Cost of capital is 16%. Looking at these two, should we do this project or stop the project? Simple. You just give a thought to the mind. IRR is 21.61%. We are making, see, 2,40,000 borrowed at 16%. 2,40,000 borrowed at 16%. I am investing in the project and I am making 21.61%. Should I accept the project? Means answer is absolutely yes. Why? We are making 21.61% but paying only 16%. Balance 5.61% is profit to the organization. Should we accept? Means answer is yes. We have to accept the project. So when the decision of accept reject comes, we are going to compare IRR with cost of capital. If IRR greater than cost of capital, accept the project. If IRR is less than cost of capital, reject the project. Suppose in place of 21.61%, we are getting 12%. Just example. Means I am getting at 16% and I am making 12%. I am getting the fund at 16%. By investing that, I am making only 12%. In such case, 4% I have to pay out of pocket. Should I accept the project? No. Why do I accept the project? My minimum rate of return is 16%, which is cost of capital. Minimum expectation is 16%. Or you understand? Look at here. Note, decision making, accept reject. If IRR greater than cost of capital, in our case, 21.61% is greater than 16%. So decision is accept. IRR less than cost of capital. As I given in the second example, IRR is 12%, cost of capital is 16%, reject. In case of mutual exclusive, select the highest IRR. This is the concept of IRR. Okay. So as I told you earlier also, please, whatever the concept that you are in need, just mention in the comment box. Definitely, I'll make the videos based on that. I am ready to help the people who are in need, whichever the concept that you are in need of, cost and management accounting and financial management, both CA and CMA student, whichever the concept that you have doubt, please mention in the comment box. I am going to give my contact number also. I am going to open the Telegram channel. There you can post the whatever doubts that you have. Or personally you can message me 9071068553. This is my contact number. You can message me personally. If you hesitate to comment in the comment section, you can message me personally. And one more thing, once you watch the video, please like the video and please try to subscribe. First of all, you need to subscribe my channel and try to like the video if you really feel the content is useful. And please intimate the friends who are in need of this subject. Okay, thank you so much, and without fail, please subscribe my channel.